Ladies and gentlemen of the crypto space, we're live on a Tuesday, June 29th, the end of the month at 11:42 a.m. It's time to figure things out because, overnight the market changed. And that's what we knew would happen. That's it always does. There are markets that are bullish turn bearish and markets that are bearish turn bullish. So the most appropriate time, to prepare for bullishness is when everyone's not bullish. It's not to run away and say, oh, no more opportunity, the opportunity go bye bye. No, that's when we figure things out. So for the last month and a half, it was wonderful. We had it was down at 4, 5, 6 gwei for Ethereum transactions. I mean, that's when you restructure a portfolio. Now when shit's popping off to a tepid 40 gwei, it's pretty meaningful transaction cost at the Ethereum L1 level at 40 gwei. And for better part of a year, we had way over 100 just to interact with these protocols. So now at this point, you want to do less transactions. You don't want to experience the transaction cost burden. But we had dirt cheap transaction fees for weeks the last couple weeks. That's when you figure things out. That's not when you say the crypto space isn't where you want to deploy capital. What are you going to deploy capital to dirty fiat? Dirty, dirty fiat or securities for these companies that are probably zombies unless they're the major tech plays. And then you could obviously think about things in terms of how Raul talks about them with the exponential age. And that's just not much interest to me. Why? Because the valuation is not something that's meaningful to me. Yeah, sure, you could say the value go up, but I have always appreciated historic methodology for valuing securities, cash flow, and that was meaningful, and that no longer exists. The P&Es are just ridiculous. So I don't want to redefine the way we valued or value securities. The way it worked was good. It was meaningful, and now it's just perverted. So that to me means that's not where I want to put capital. So I put capital obviously in battery metal miner securities. I've done that for years, and then those P&Es are zero, if not negative, and they're burning, investor cash to get to where they want to be to generate their cash flow. But for me, the cash flow opportunity and the real opportunities are in the crypto space. This is the only market that I understand. It's the only market that makes sense from a valuation standpoint. It's the only market that makes sense from an innovation standpoint. There's nothing innovative about a security. A company says, all right, I'm going to incorporate, I'm going to make a bajillion million shares, and I'm going to sell those shares. Whoopee fucking do. That's not impressive at all. Oh, but how about you create assets and you have emissions and you have deflation and you have revenue sharing and you have all these fancy components uh, to these protocols and the assets of these protocols that has been created in the crypto space. This is fancy. This is new. This is interesting. This is exciting. This is not the old way of doing things. And that is why this is where my interest is. I'm not interested in the old ways. I'm not interested in old. I'm not interested in playing the game that the global elites made for the retail players. Not interested in their fiat system, not interested in the securities markets that have been around for well, however long New York Stock Exchange has been around. I don't want to play their games. I don't want to be involved with what the SEC has historically regulated. They're going to want to regulate crypto. Great, let them regulate whatever the hell they want to do. I just don't want to play the game that they created over the last 100 years. That's all I want. And that's the opportunity I want to expose myself to. New, novel, innovative. You could call it Silicon Valley, but that's really moving to like South Florida. The way the New York the be the leader in the New York mayoral race. That's the way he's talking. New York and Texas and Wyoming and every damn state eventually in this country because they want new, they want innovative, they want interesting shit that the general public is like, wow, that's something new. We never did it like that before. Be the bag, boys and girls, damn it. Lockening, more locked than emitted. So this topic is fun. This obviously comes back to probably the core protocol in the crypto space that drives a huge amount of cash flow, extraordinary amount of cash flow. And that's Curve. And now you have Yearn. Everything about Yearn is based on Curve success, which is awesome, and that's cool. And Yearn plays a vital role in distributing Curve to the general public, and that's actually very meaningful if you think about things from a structural perspective. One second. Got to let the dog out. I let the dog out. Who let the dogs out? I did. So if it wasn't for what Yearn is doing, they would be accumulating an increasing quantity of Curve over time, and that would be centralization of the asset. And so what they're doing in many regards, if you think about it, is the honorable, appropriate way to do things. So let's get into the stream. Let me show some screens and see what's going on. The Lockening, more locked than emitted. Today's episode is sponsored by Change Angel, non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Let's pop it over to the main screen and see who's in the stream. Got wave mappers in the house. Ding, ding. Morning all. Good day, Noah. I'm entering a small position in osmosis. Shall I aim to keep some atom? It's obviously a subjective decision to deploy capital somewhere. Osmosis just dropped a boatload of capital. So I've had a large atom position for a long time now. It was like $2 buy a while back, and they just keep cranking it out. This thing was 5,000%, the Iris Osmo pool. So I have no idea what the heck the price of Osmo is going to be. This stuff is brand new. And obviously it's inflationary. We got a bunch of votes going on. They're increasing the block size. So it's an entire blockchain. Osmo. And every one of these is an entire blockchain. And that's the whole point of Cosmos. We've talked about it. So this is not a supply disruption regime. This is an inflationary set of blockchains that are not decreasing in quantity of circulating supply. There's increasing quantity of circulating supply. The thing is, it's an entire nascent ecosystem of blockchains. So you could have increasing supply. You could actually have hyperinflationary supply. It's just there's going to be so much demand because nobody owns any of this shit. The whole world has to consume it. So they have to create the assets for the world to consume. So I don't know. Point being, the two assets that interest me most are Iris and Atom. Atom being the core of the Cosmos ecosystem, and Iris being how the Cosmos hubs link to the BSN, which is the Chinese National Department, the Chinese the Chinese Department of Blockchain Technology. It's what it is. Anything out of China is from the Chinese government, and that's what the BSN is. And Iris is that is plugged into the BSN, which means all Cosmos hubs are plugged into the BSN vis-a-vis the IBC, which is exactly what you see here. Any blockchain, any Cosmos hub blockchain that has the IBC implemented, you could swap, you could trade. This is a DEX, like any other DEX you've ever seen in the Ethereum space. And that's pretty cool. That's pretty cool. It's nice to see it get off the ground. There's a Gravity DEX. There's a couple of other things coming out for Cosmos Hub. And then you got Polkadot, IrisNet, and Ethereum. Those are the blockchains that are in the BSN. Holy crap. That's the China narrative. So we got those three narratives. You guys know the deal. You guys know the deal. Kel's in the house from Norway. Love your region of the planet, my friend. Love it. Larry, buenos tardes, mi amigo. Buenos días también. A lo todo. The captain's in the house. Warning, we have an OG in the house. We're talking about bullishness heading into Gravity Dex. Yes. Well, we always had bullishness, my friend. We know the deal with Cosmos and the Cosmos hubs. We've been talking about Atom for a long time, Captain. Captain makes it happen. Larry, what are your thoughts process on ICE versus convex opportunity cost? There's absolutely no opportunity right now with ICE. It's only speculative opportunity. Um, it needs to be released. The liquidity pools are filling. We have no idea what the revenue share is going to be. So tend to avoid speculation. If anything, it was only like 2% of the portfolio is applied to ICE, and every second of every day, I'm losing out on gains that I can make from CVX and CVX CRV. So there's opportunity cost right now. If you take a position in it, you're literally losing capital, which is revenue, which is cash flow. You're losing it. So that's what opportunity cost is. And a nice position right now is 100% opportunity cost. You're losing out on all the cash flow of other protocols because there is no cash flow for ICE currently. And obviously, it's speculatively appreciating, but I can care less if an asset's going to be low and then high. I don't want to sell assets. I don't want to buy low, sell high. I want a portfolio that runs itself, that makes its own capital, and that's it. I want cash flow. I don't want to sell assets. I want to accumulate assets that do the work for me, that make me money that I don't have to liquidate. Don't want those taxable events. That's the bottom line. Daniel, are you a fan of Harvest Finance? Not really, not that much. I don't like providing liquidity anymore. I'm not interested in providing liquidity. What I'm interested in is revenue share ownership. You know, you have the aspect of a dividend bearing instrument. You know, it's just a preferred stock or a REIT, however you want to look at it. But you're owning a part of platform transaction fees. That's like owning a part of Fidelity's transaction fees when they had them. That's crazy. And that's what the couple of assets in the crypto space are. You know, that's what really CVX is, and that's what really CVX CRV is. VE curve. Why VE curve is meaningful as well. I just see opportunity cost with it compared to CVX CRV, which now has more of a TVL than Yearn. There's more value locked on the convex platform than there is on the Yearn platform. Yet, if you take a peek real quick at Popsicle did good 25, was it 25%? But if you look at CVX, check this out. Check this out. So if there's more TV, this is a little off, but there's a couple of other ways to measure TVL. But if let's say the TVL for Convex is more than Yearn, Convex is a $32 million market cap asset. Yearn is a $1.2 billion market cap asset with just about the same amount of capital under management. So, think of a hedge fund that's managing the same amount of capital, yet one of them is worth about 80%, 90% less. Food for thought. Food for thought. These are the things that I'm thinking about. Interesting stuff. Hey, Noah, sushi fits right in your long term thesis. I know the bigger market cap keeps you away, but keep this in mind. The sushi emissions drop in 2023. The revenue could be forever. Yeah, so that's great. That's speculative. And I like that. I like X Sushi. It's very meaningful. And, FTX as the owner operator, that's a big deal. It's a heck of a company. Sam does a heck of a job, and he's impressive from an entrepreneurial standpoint, from an engineering standpoint, of software. It's incredible what they're doing. Sure. The problem is it doesn't produce cash flow today. If you don't have cash flow today, you don't have a business, you don't have revenue, you're not taking a salary, you're not accumulating tax obligations in a meaningful way. And that is something to consider from an opportunity cost standpoint. Matthew, you're very welcome. It's a pleasure. FM, no, you think it's possible for the XTK token price to come back? Well, that's a very speculative statement. You're talking about an asset, a DAO asset that gives voting rights. There's no revenue share. It's inflationary. The incentivized emissions. Are there any deflationary pressures? Any circulating supply disruption components to the protocol? Those are the things you want to be asking yourself from a monetary policy standpoint. Love those boys, love that team, love those devs. They're very innovative, creative, and that's some good quality software. And that's a big deal, in my opinion. It's just not something that's suitable for my balance sheet. Nathan, any revenue sharing platforms on Poly? Not that I'm aware of, my friend. I mean, Sushi's on Poly and Curve's on Poly, but I don't know if they have revenue sharing components deployed cross chain yet. I mean, pretty much Andre, in my opinion, is working like day and night on cross chain, like seamless cross chain, where you won't even know what the hell. As I've said, you won't at one point you won't even know what chain you're operating on, and that's what like AnySwap is working on. It's like, what chain am I operating on? So once this is there's contracts, which that's what Andre does, is make these brilliant contracts, and I'm sure at some point we'll see these really powerful contracts that facilitate like seamless cross-chain functionality, where one contract on one chain triggers another contract on another chain. That's crazy sauce. So there'll be like wrapper contracts, proxies, so on and so forth, and they'll be seamless. You'll be able to interact with one D app on one chain, and it does shit on another chain, and you won't even know what the heck it's doing. It's inevitable. Nuno, hey Noah, could you please explain Try Crypto on Curve for a newbie that's trying to enter DeFi? I've been looking at CVX as well. Well, Try Crypto is a liquidity pool that has overtones of the way Balancer functions, but it has the the curve characteristics of concentrated liquidity that Uniswap was trying to hit, that third party providers have to implement. And pretty much the first third party provider to actually have good TVL and critical mass in many regards is Popsicle Finance. It's definitely not Advisor. Sure as heck is a method. But Popsicle's got, like 10, $12 million at this point. That's a big deal. That's a big deal. That's the Uniswap V3 narrative, and their partnership with Alchemist. That's the Uniswap V3 Vault narrative. So it's tempting to try and hit those narratives from a speculative play. It's not generating any cash flow. So that's what's really tempting me to not hold the position. I got about 15,000 pop ice right now, and I'm like, why am I holding it? What's it doing? It's not doing anything. It's not working. Every second of every day, it's doing nothing. And I'm not fond of that. I don't want assets that are just sitting. So I know speculatively they're going to cut them. They're going to have the revenue sharing component with N ICE that's coming really soon. It's up 21%. I'm not complaining. That was a nice profit. But man, it's really, for me, it's hard to hold assets that are not producing revenue. It's really hard nowadays. So that's just a little insight into the way I think. I mean, CVX is just the yield generator. It just cranks out revenue. I mean, it just generates whatever the heck it's generating. 64% on the dollars. I pumped some capital in there. It's about 107 chip, 26 thou. So that's cranking out a fair amount on a daily basis. And the best part is it's pure curve, lock curve. If I'm getting, 150, 200 CVX CRV a day, that's wonderful, because that's going to further increase what's most important, the salary, which is 3 curve yield. That's a big deal. Now, this is a big deal too. Badger has really, memes aside, and like Popsicle Finance and Badger historically threw me off, but when does a meme not become a meme anymore? When it actually creates value and meaningful technology, and these smart contracts are serious at this point. It's not trivial what they're doing, and Badger's integration with RenVM, the Ren Bridge, and these vaults and these helper contracts is meaningful from a functionality standpoint. I mean, this just launched like 2 seconds ago, and these are helper contracts for convex. So Badger's trying to hit on curve and convex, and Badger's hitting on curve vis-a-vis the Ren Bridge for BTC yield. So, I mean, I think they hit a niche very nicely, and they're focusing on it very well. So this is cool. This is basically turning APR into APY. It turns convex CDX and CDX CRV into auto compounding positions. So this is brand new, so you might want to wait to find comfort with these types of positions. This is barely just started. There's no TVL. And you want to make sure that the contracts are functional. You want to expose yourself to excess risk. But this is really cool. And these protocols, this supports Curve. This disrupts circulating supply. And here's something that's meaningful as well. Check this out. Let me find it for you guys. Boop, 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 boop. So if you go over here to Convex on Discord, make sure this is showing. Very nice. So the Convex Discord server, you see the CVX daily report. more curve on a daily basis is being locked 170, 160%, basically 100%, 122%. Net CRV emissions are being locked and removed from supply. And I would imagine this is possibly just convex, not considering YVE CRV and not considering VE CRV directly for governance rates. That's crazy. If you got 200% daily emissions being locked, that's a net deflationary protocol. And if you're talking about monetary policy, which that's what we got to talk about, hyperinflationary or hyper disinflationary, it's a strange phenomenon when you're talking about its inflation curve because it's a massive amount of emissions, but it's disinflationary because those emissions will decrease in August. Um, which is decaying inflation, which is the same as Bitcoin. Um, but the Lockening and the deflationary pressures, the incentivized supply disruption, and the revenue share component makes this a net deflationary asset. That's crazy. That's crazy. A net deflationary asset that has a massive amount of inflationary emissions. That's crazy. This is monetary policy experimentation. No sovereign country ever has done anything or tried anything like this. To understand these protocols, you got to think like a central bank. That's it. There's some serious stuff going on. This experiment is crazy. Stephen, Pickle has released Dill. Dill is available, and Pickle has the current monetary policy, which is very interesting. It has very low um, supply cap, which is pretty cool. And Circulating supply is low, which makes Pickle a relatively decent price point. Pretty interesting. Just something that's off my radar. It's very expensive, like 600 grand. It would take to get like $5,000-6,000 a week in revenue stream. So it's an expensive revenue stream. So it's too much opportunity cost for my taste. Stephen, FM, your thoughts on buy down? Not interested. Can you please give us your thoughts on BTCTA? Looks like a bullish turn. Yeah, Bitcoin looks really good. Always did. I mean that the point was that the point five. It always doesn't draw when I kill the renderer. Oop. Yeah, it's the point five on the fib retrace. I mean, it held it. Yeah, but I look on the weekly. I'm not looking on the daily. So if you look at it on the daily, it never closed below the point five fib retrace on the weekly. So we've been hammered for the last one, two, three, four, five, and we're on week six, and it never broke the point five on the fib retrace. It's pretty cool. Check back next week. I'm not looking at short-term charts anymore. I don't have time for that shit. So this chart looks crazy. Come on, wicks below the point five, and it never broke below the point five. That's crazy. Incredible price action support on the weekly. Look at that. Look at that. Even here, you had significantly more volatility with regard to the candle close, but not one of the weeks on this retrace has a close below the point five fib retrace. That's awesome. Um, Mario, Adamant Finance is revenue share and Polygon. No, Adamant Finance is an LP protocol that automatically turns APR into APY. I'm not a fan of so I'm not a fan of LP positions anymore. I don't have time for that. Now, if Adamant had like a revenue share, like all pools, 5%, 10% of revenue for all pools go to Adamant holders, that's interesting. I don't think that's the case. Correct me if I'm wrong. If you hold Adamant, you don't get a revenue share from all LP providers. So that would be a revenue share protocol, and that would be interesting. Um, what percent of your portfolio is convex at the moment? Convex or CVX? CVX or CVX CRV? That's for you to ask. The entire convex protocol probably has about 60-70% of my capital allocation at this point, or my portfolio. Good day, Noah. Tezos and Algorand are part of the BSN. Yes, as well as Neo, which means basically nothing. There's literally no DeFi development whatsoever. And Tezos, Algorand is meaningful, but it's so speculative. Where's the critical mass liquidity? There's no extensive DF development, and there's surely no critical mass monetary velocity. Monetary velocity is the lending and borrowing of capital on money markets like Aave and Compound. It just doesn't have a financial system, and until you have critical mass liquidity on a money market and DApps to actually interact with, you're never going to have critical mass monetary velocity. To look at these networks, you have to look at them as financial systems. And without critical mass monetary velocity, you have basically a dormant financial system. And that's kind of what's going on with the federal government with the M2 velocity. It's a dormant financial system, which is basically stagflation, more or less. Uh, you do get a revenue share on Addy. Okay, let's take a look. I'll take a look real quick for the fun of it, Mario. Appreciate all the info. I am new here. Ken A, you're very welcome. We're trying to do things different. Stake vest Addy. Vested stake, all freshly minted Addy, vesting all penalties, all distributed, all Addy, earned, locked Addy is not possible directly lock. Uh, let's see if there's a revenue share. False. Staking Addy. Staking up. It's not possible to directly lock fast Addy. Lock demonstrate commit long term. Receive 100%. No. Okay, so Addy only receives 100% of the penalty fees. Let's take a look real quick. No. They earn the same performance fees. Yeah, there's no clarity. Let's take a look at utility real quick. Here, token supply and emissions, providing tokenomics. Okay, no, this is inflationary. They're minting Addy for every 1 ETH earned in performance fees. BNB safety. We'd have to look into it more. I don't think it's a revenue share directly. Maybe the performance fees are used to inflate the Addy supply, where Addy is representative of the treasury or some shit like that. It's not something that I'm interested in. Doesn't mean it's not lucrative. Obviously, it has a huge amount of TVL, but that means it's speculative, and I don't really have interest in speculation nowadays. I'm interested in how much capital a protocol is generating on a daily basis. I'm interested in real deal, real time cash flow. Boom. Mario locking Addy receives the penalty. Yeah, but penalty is not what I'm interested in. I'm interested in that revenue share of all liquidity providers. That's the deal. What else could I talk about today? 1210. We're right on time. Ethereum looks good too from a technical perspective. Was at the 0.618. Let's go to the daily. So I get some fib retrace numbers. That's the 0.786. So it held above the 0.786 on the fib retrace, which is incredible. Look, it never closed below 0.786. So both these from a weekly, just fib retrace technical standpoint, there you look at JT's inverted charts, which are off the hook. They look great. These charts look great. And take a look at curve. Let's go out to the daily. No, let's go out to the weekly. I like the weekly charts better. Come on, we got some green in there. Look at that. Look at this floor. Looks wonderful. And then curve BTC is obviously significantly outperforming. I mean, look at that. Look at that compression and a break right there. That's awesome to see. Let's go out to the daily. Go out to the weekly. Tired of short-term charts. I mean, look at that trend. Higher lows. Definitely higher lows. Oop. I'm not going to start drawing. Oop. I can't even do it. I'm not drawing. All right, maybe a little bit. Let's fix that. Higher lows. Good to see. Whatever, it's all good. What matters is the revenue share. I could care less about the price of curve at this point, but it's nice to see it outperforming because that means as you accumulate like a cash position, either for salary or tax obligation purposes, the value of curve is in many regards relevant, optionally, so to speak. All right, 61 people in the stream, 24 likes. We can do better. Let's wrap it up a little bit early today, 12 p.m. on a Tuesday, June 29th. Got a lot of people on Discord right about now. This thing is hot. I was a little quiet for a while with the market dormant and for Gwei transaction fees on Ethereum. But obviously, just like clockwork, when the market starts to get hot, people start to ask questions and start trying to figure things out, which is really the antithesis of the way people should engage with these markets. When the markets are dormant is really when you should be doing these things. Um, but it is what it is, and we're there. We're in Discord. We're figuring things out together. Heck of a community. Um, and now we've been talking about some new things. We got Popsicle, we got Badger, and I talk about osmosis as well. So um, for a while, we were just talking about Curve and Convex, which really still is the opportune play of all. And that's my whole goal is to get you guys to stop thinking about ridiculous protocols. Stop thinking about bunny pops and magic internets and and poly finances, and what a waste of time and effort. And providing liquidity is such a gimmick in many regards. And if you're the bank, you're not providing liquidity. The bank is taking transaction fees from every single person that provides liquidity. So that's what catches my fancy from an opportunity standpoint. Let's wrap it up. Tell everyone to subscribe. Thank you all for joining, and I will see you all tomorrow.